Good morning and welcome to 7 at 7, your daily news capsule to get you clued in for the day. It's Tuesday, November 5th, and I'm your host Anirban Chaudhary. Starting with the global markets, US futures rose even as markets eyed two big events this week: the US presidential elections that start today and the Fed's rate decision. Investors anticipate the Fed might pause or introduce a smaller rate cut, reflecting confidence in inflation control. But they're also wary about weakening economic data. So on Monday, futures on the S&P 500 edged up about 0.3%, with market sentiment buoyed by sectors like consumer staples and technology. Bond markets also gained, with 10-year Treasury yields dropping slightly as investors sought safety amid uncertainty. The dollar, however, remained relatively stable, supported by its appeal against other global currencies despite rate cut expectations. Analysts suggest that while a recession seems unlikely for now, slower growth could still affect long-term investor confidence. Onto the global airline industry and arguably the biggest Indian name in it. Southwest Airlines has named aviation veteran Rakesh Gangwal as its new independent board chair. This followed the retirement of its former chair, Gary Kelly. Gangwal, co-founder of India's biggest airline Indigo and a former US Airways executive, joined Southwest's board in July. This was amid pressures from activist investor Elliott Investment Management, which had called for leadership changes. The restructured board at Southwest now includes 13 members, with several committee chairs appointed to support the airline's ongoing financial goals. Do remember that Gangwal fell out with Indigo co-founder Rahul Bhatia a few years back. He and his family have already sold a large chunk of their shares at Indigo. In India, the stock markets took a massive hit, dropping over 1% as foreign investors offloaded holdings amidst global uncertainty. The Nifty fell below 24,000 for the first time in 3 months. The Sensex also dropped significantly, closing at 78,782 points, down nearly 942 points. Analysts point to nervousness about the upcoming US presidential election and the Fed's rate decision. Sectors like two-wheelers and power, and stocks such as Reliance Industries were major laggards, reflecting broader investor caution. The market wasn't the only one to be anxious about the US elections. The rupee also weakened to a record low of 84.11 against the US dollar as investors pulled out of the market. Other contributing factors included rising oil prices, with Brent crude up 2.5%, which put pressure on India's trade balance. Hope for interventions from the RBI helped avoid steeper declines, but it remained less aggressive in dollar sales on Monday. Here's some good news. India's factory output showed a robust rebound in October, with the PMI rising to 57.5 from September's 8-month low of 56.5. This uptick was driven by a surge in new orders and exports, indicating solid demand both domestically and globally. Manufacturing output increased across consumer and investment goods, supported by higher employment and reduced backlogs. Inflationary pressures persisted but remained manageable as input prices hit a 3-month high. On to India's financially beleaguered diamond industry. Surat's diamond factories, a global hub for diamond cutting and polishing, announced an unusual month-long Diwali closure till November 30th. About 5,000 units employing 800,000 workers will be impacted by this. Reason: weaker diamond demand from key markets, the US and China. This comes after the recent G7 sanctions on Russian diamonds, which have disrupted global supply chains. As a result, Indian diamond exports have declined from $8.7 billion last year to $6.9 billion in the first half of FY25. In a recent regulatory move, the Indian government has intensified efforts to prevent unauthorized use of PAN details by tech companies. It has mandated the closure of PAN enrichment services. What are these services? Well, they would help loan distribution companies create profiles of their customers against their PAN numbers for cross-selling of credit and other financial products. The 2023 Data Protection Act backs this crackdown by the government, demanding user consent and restricting access to sensitive data. This, of course, aligns with India's upcoming data privacy rules. That's it for today. Grab your copy of the Economic Times and log on to our website and app for more news and analysis. This is your host Anirban Chaudhary signing off. Have a good rest of the week.